Good morning. All right. Let's see where we have planned for today. And by the way, I see, I'm looking, Florence is not here yet. You know, she had this AVGO put spread on. I don't know what she did with it yesterday, but it reported after hours and looks like it was good and it got an upgrade. Well, if she did hold on, it looks great. Sometimes you get lucky. And that was a getting lucky trade, get out of jail card free if she held on to it, which couldn't have been easy down here when it was at the low. I did mention to her yesterday that if it got above the 224, it had a shot at 226 and it jiggled around. And then after the earnings, big pop there. So hopefully she was okay with it. Pretty hard when something's going down like that. In any event, we'll see when she comes. Good morning, Phil. So markets here clearly are beginning to or have already formed a trading range. And yesterday's wide reversal bar after the dip down to the bottom of the range, you know, buyers stepped up again. Now, is it really a bottom, a low here that could be dependent on as much as we could say it's dependable? It's hard to say, but we have to consider the fact that, you know, it went from the top of the range down to the bottom of the range in 2 days. So that's an extreme move. And especially on a gap down of the size that there was, and then the dip down here, that clearly was technical buying that then began to, feed on itself. And it continued to do that yesterday and came up here and filled the gap. Now, once it did that, we go into, factory work mode, so to speak, meaning is it consolidated here and broke through it? If it pulls back to here, buyers should show up. The most bullish thing or more bullish thing it could do would have been if it went sideways, which it tried to do here, and then push higher. So it couldn't do that. So it came down to support. And then I guess on the jobs report, it had the big pop up. So that news is out of the way. SPY, big volumes, novice, professional volume. Well, we would look, it's at the bottom of the range. It just makes sense. But look at the volume coming down, which is in opposition to somewhat of the volume going up. So we don't have something clear here as to, okay, this is a bottom point. And look, we have other technical concepts that we bring into one concept, meaning bottom of the range is support. Big volume suggests buyers stepped up their professional volume. Okay, let's go with that. Another concept is how did it pull back? Meaning, what was the angle that it pulled back at? This was vertical, like it fell off a roof all the way back down, and then it gapped. So, and this is why I'm saying, was the velocity and the amount that it fell in such a short amount of time brought in that technical buying. So can we count on that, so to speak, as to this is a low? Well, it's been down here 3 times. That's a plus. The angle that it came down at, that's a negative. Now, one of the discussions that we had yesterday in the room here was about big bars starting a move, but what is the real money part of the move? If you remember that conversation, meaning a big bar can mark the low, but rarely is it the point at which the move really happens, meaning the easy money, big trending kind of move. That happens after small bars. So this may be marking the low, right? It's kind of like the range expanded here and it marked the low. Now, this isn't a great pattern as far as, but a continuation because it's wild, schizophrenic, and this was a move down. What we're really looking for here and what I'm talking about is where prices, maybe this, well, where are we here now? We're down a little bit, kind of. Dow is up a few points. S&P is just flat. Qs are down a little bit. Qs a little bit of relative weakness. But one of the patterns we looked at yesterday was something like this, where it just kind of tightens up, with the ranges get tight. And so this now has created a void below, right? You can see it right here, right? How the speed it moved up. So what we want to see, and this isn't going to happen today, because here we're looking at a daily chart, is that over the course of some time next week, if this was to come up and we see tight ranges, that would open up the door to moving back up to the top of the range. Now, part of the understanding of the technicals with that, this is what I always try to explain when we look at a chart, is what's really going on here. The understanding of, I don't know if the mechanics is the right word, but maybe the understanding of the psychology behind the pattern, meaning this is scary, right? Meaning there's a lot of fear associated with it, panic. Let me get out of this thing. Something crazy is going on here. And it creates a lot of uncertainty. The bottom, the big bar there, gets a turn, which dissipates that fear a little bit. Yet it came down real hard. Nobody's looking at this and saying, you know what, this is going up here today. That's not going to happen. However, what I'm talking about here, where the range begins to tighten up, takes several days for that to happen. Now we're taking into consideration of time and the contraction of ranges or volatility, which time moves prices away from this uncertainty, this fear, this craziness of this kind of a move. And that in turn brings in a greater level of confidence about what's going to happen. So this is why after a big bar, which can mark the low, this tightening of ranges and movement over time helps to dissipate what preceded it. In this case, a move down. Now, it can happen in different ways. Of course, this could be in an uptrend and do that. And that's even a much better pattern, where maybe it was a minor pullback, but it's in an uptrend versus a trading range. So we have these ways of interpreting price action, and then we take the next step to put them within the context of what is the trend on that time frame, what's happening in multiple time frames, meaning is the higher time frame in an uptrend or is it a downtrend? And all of that, helps us come to a pretty solid bias about what's likely to happen. So, right now we've got this void above. We've had a retracement, which is bullish, but kind of neutral, because if it was really bullish, it would have stayed in the upper half of that wide range bar. So it couldn't do that. But when it got down to support, we know this was news related, but it exploded higher. That's a good sign. So at this point, we can have a bias that this can move up. But look, you've got this stuff over here. So we're dealing with a situation here this morning where prices could move higher because of this price action right here, as explained. But the upside more than likely is limited. Let's just clear this up here. And it could be the 20 MA, which comes into play, and that's around 272, let's call it 40, 272.40. That's not very much, but it's right here. Let's say it can get through it. So I think the upside here is limited today based on this price action. If it clears this area, it's likely to go up a bit, and we may just be into a whippy back and forth kind of day, and it is Friday. So what we want to do is keep our bias in alignment with what is very clearly sideways, Tony. All right, we have a trading range going on here. Look, there's no doubt about it, right? We have no doubt that there's a trading range here as we look at these spiders. We've got 3 touches up here. We've got 3 touches, pretty much. Down here, sellers take control, buyers take control. This was part of a measured continuation move down here. Big rally up, showed strength. Big decline down, weakness. Strength again, all the way back down, right? Mr. Schizo market, right, in play here. Dan, I don't think is here. Iron Condor here. Yeah, we'd have to look at that if it was, you know me. I hate anything that goes too far out in expiration. So I don't know what premiums are there. I looked at this yesterday near the close to see what premiums were there. So there wasn't enough juice, definitely for today. Going into next week, I can take a look at that. And I saw CL was actually up, so you know we're gonna get to that, and because there is a put spread on USO, which is obviously going to be doing very well, you know, getting toward max gain, with CL moving up. But right now, you know, this suggests we're going to stay in a trading range. Now, over time, if we don't see much headway here, you know, depending on the bars that form, well, that's going to be next week. We'll get to it when we get to it. Right now, vertical move down, bottom of the range. It supports some kind of stabilization down here at a minimum. How far it could get, I don't think it's going to get very far today, just because of the angle that it came down at. And it may not go down very much. So we'll see. Qs, you can see here, pretty much doing the same thing. Really the same thing. Higher low, so a little bit of relative strength. Over here, it was relative weakness. And you've got lower highs. That's not a trend line, Alex. It's just marking off lower highs. And over here, the possibility of a higher low. We need more bars here to see if this is actually a pivot type of bar to establish this as a higher low, because today could be a red bar and it just goes back down here, right? So we have to see. Now, if it does make a higher low, which at a minimum, going to take a minimum of 2 and ideally 3 higher low bars to the right to establish this as a pivot or a swing. And then what the takeaway will be here is that the uncertainty that was created by these wide moves, are tightening to where buyers, their confidence is increasing to say, I'll buy at a higher spot, not wait for it to come down here. And sellers are saying, well, I'm getting more confident and I'm willing to sell at a lower spot to get in, right? So resistance is an area. They're willing to get in here. They had the 200. There's your death cross right there that says, hey, you know, the world's coming to an end. And so now as you have volatility contraction, you're getting closer to some sizable move. Which way is it going to go? We don't know yet. We don't know yet. Our internals aren't giving us a big heads up here. And we'll just take a peek at those for a minute. Let's just clear that up. You can see that sentiment is still in the bearish range. This up here is where the idiots got all in. And it was actually up here intraday. This is the close, but it was up here intraday, right? So they were like in a very giddy, moronic idiot move on that day, intraday, right up here. Mentioned that in the room. And, you know, right up near resistance. How stupid can you be to load up on calls after a move up like that into resistance, and especially on a gap, right? And then they were still on the call side as it started to drop like that. So, you know, now they're kind of coming to their senses a little bit, but it's neutral. But our moving average is still up into those bands there. So it doesn't support a move coming off of here, a meaningful move. So we'll just have to see. And it kind of leads back to more of, hey, Probably, maybe it comes up here to the 20. It does whatever intraday. Yeah. Watch your hourly chart. If it's in an uptrend, sideways, or downtrend, we always do that for our intraday trading, Tony. Right? We use our hourly chart for an intraday bias, at least, from that time frame. So we've got this void on the hourly chart here, and we really don't have any major resistance points because, well, I guess we kind of do here. We got 3 lower highs, but you got this gap. So, and this is a 24-hour chart. That's why it's gray like that. But this has started to trend up. It's got a void above, but you have to put that in the context of this vertical move down. And meaningful moves, as I explained on the daily chart, what we would be looking for where things would tighten up. Well, when things tighten up on the daily chart, what you have is a consolidation on the hourly chart. And that becomes our launching pad. And so I'll repeat that for just kind of get that in. Your big bar can set a low or a high, but then the range, the range tightens up. Your hourly chart starts to form a base. And now what we start to do, we're always doing this, but what you're doing is what I explained in the MT Live yesterday. So as we go down and look at this hourly chart, we're looking for 180 reversals. We're looking for bottoming tails. We're looking for downside shakeouts. We're looking for these little clues that are supportive of our bias as things tighten up, that prices can move back up. The next step is, well, up to where? Well, we're in the trading range, so don't get too excited here thinking, new bull run that had happened earlier in the year. We're just not there yet. That'll happen when and if the weekly time frame starts to form that consolidation and base, and maybe that's what's building here. So we're not out of the woods as far as a turn that could possibly get back up to the old highs, or whether this is a consolidation that's building a resistance area to make a plunge, a next plunge lower. We just don't know yet. So you got people out there with all these opinions about such, but I'm telling you, the charts don't know. They don't support it yet. So what you have right now, you have people with opinions about things for whatever reason, but the vast majorities are confused. And that's why the charts look like they do, because the majorities are confused. You have people that are selling the highs and you got people that are buying the lows. And at some point, somebody's going to win this battle. It's just not there yet. All right, Russell broke the lows, so relative weakness. It was showing a little strength earlier. So now that's broken down. You've got the bottoming tail bar. Does this turn out to be a shakeout? That'll be one of our clues. Do we have a bullish scenario setting up here? So if this turns out in retrospect to be a shakeout, which will have to do the same thing of what I've already explained, sideways price action over here, and then back up, move away from this resistance. We'll see next week. Transports, we're showing strength, collapsing, held. For now, angle of retracement is sharp. We're not going up in the moment here. Right? So while we can find some longs, maybe we'll find better looking charts like Tesla that Dan put a put spread on last week. It's gapping up here. It looks great. And, gap up like that, probably best to close that position if you're in it. I didn't look at the time to expiration. I can check it out. Let me just see. 320, 310. It expires on the 14th. So got some time on that one. And the diamonds, just same garbage. It's garbage. Highs and lows. We're in a trading range here. And we're getting a little late here. And you can see what's going on here. Here's the S&P's inside day so far. This may be what we're in for, where it's holding here. You got a downside shakeout because we got that bottoming tail bar. You've got a nice little kind of a consolidation here. The next reference point of resistance is right up there. which again brings us to, if you're thinking long, have your expectations in check here, because it would appear that the upside is likely to be limited today. And Q's up at resistance, same kind of pullback, resistance right there. Bottoming tail bar, same conclusions. And the Dow, pretty much same stuff, same kind of pullback and move on the news. Bonds pulling in a little bit, right? They've been working on an inverse relationship. So we'll see how we got that topping tail as opposed to yesterday's equity bottoming tail. And we'll see if this comes in. Oil, nice reversal here. Nice move up, which is going to do wonders for that put spread, which is in the advisory letter, 10.5 by 9, expires 12/21. So there's quite a bit of time on that, but this is exactly what we needed to see for that spread. Well, this is the bonds. This is, the crude oil contract, but as far as USO being up here like that, pushing up to this area, establishes this as a what should be a pretty solid low for the moment. And as I say, for the moment, because it is in a downtrend and bottoming patterns have a high tendency to disappoint, but it's a good start to a short-term low. And so, as you know, with a put spread, it's just don't go down there, please, until my time expires and I get to keep the money. That's the whole idea. And if it does, well, then some management strategy has to come into play or get out of the way. And gold just continues to act well, right? Continues to act well, I guess, based on this idea. Well, two ideas: seasonality, people buy gold for the holidays, and the Fed. The Fed, not view now is that they're not going to raise interest rates. So, all right, markets are open here. Let me move over to the other charts, close this down, and see what is happening here. So, you YouTubers, I am sorry I did not able to answer your question. But let me take a look. Hope here's my wounded account. Okay. Good morning. Good morning. Yesterday looks like October 23rd. It was a huge drop. Yeah. Art, have you emailed to contact? Do you have an email? Greg at Master Trader, Art. Greg at Master Trader. You can email me. All right, everybody on YouTube, we're going to log off here. Consider taking a trial to the room next week. You can go to the Master Trader site, the green room, and you can sign up for a trial. Talk then.